Hello and welcome to Energy Insights, your go to source for in depth analysis of the global energy markets. Today, we are covering the global energy markets updates, particularly due to the recent developments. In today's update, we break down various developments shaping new energy prices and the market dynamics from geopolitical shifts in the Middle East to Europe gas crisis and the latest markets data driving volatility across the oil, gas, and the refined products. Let's get started. Under the segment one, we are covering the oil markets and the Middle East recent developments. Let's begin with the segment one. Oil markets in the Middle East, where prices are reacting to the shifting geopolitical signals. US oil prices have recently pulled back as markets respond to the possibility of a ceasefire in the Middle East, which could ease concerns over supply disruptions. This follows a period of heightened tensions that had pushed prices higher due to fears of constrained exports from the region. The Middle East remains a critical supplier of the global crude oil, and any disruptions, particularly around key export routes, can have immediate global price implications. As expectations of improved supply conditions emerge, traders are adjusting positions, leading to a temporary cooling in the oil prices to be shifted to a balanced way. However, the situation remains highly fluid. The key takeaway here is that the oil markets are extremely sensitive to geopolitical developments, and even the possibility of easing tensions can quickly shift price direction. And this evolving geopolitical backdrop is not just impacting the oil, it's also creating a ripple effects across the global gas markets. So, and which is our the segment 2 story. So, under the segment 2, we are moving to Europe's gas crisis situation, where the situation is becoming increasingly critical, and this is our segment two, which is Europe's gas crisis. Europe is entering a high risk period with gas shortage levels falling to around 28%, significantly below historical averages. After the cold winter. At the same time, ongoing geopolitical tensions are disrupting the global LNG flows just when Europe needs to begin refilling its reserves for the next winter. Gas prices have already reacted sharply, with European benchmark futures rising significantly, reflecting tightening supply and the growing competition for the LNG cargoes. The challenge is structural here. Europe is now heavily dependent on LNG imports after reducing reliance on the pipeline gas from the Russia. With limited global supply and increasing demand from the Asia, Europe could face intense competition for cargoes, pushing prices higher than the expected ones. Policymakers are responding by arguing early storage refilling and considering adjustments to the storage targets to manage costs and avoid further price spikes. The key takeaway is clear, which is that Europe is entering a tight gas market with low inventories and rising geopolitical risks, making the upcoming refill season critical for energy security of Europe. And these supply pressures are now clearly reflected in the broader market pricing and volatility across the energy complex. So, coming to segment 3, which is the market data and price volatility as of today. So, now let's move to segment 3, market data and price volatility, where we take a snapshot of today's energy markets. We are seeing a strong rally across the energy complex led by the crude oil. WTI crude is trading around $87 per barrel, which is up nearly 6% of increase, while the Brent crude is approaching $98 per barrel, also gaining close to 6%. In the gas markets, the natural gas prices are relatively stable but trending upward. Currently around $2.89 per MMBtu, supported by a steady demand and tight LNG supply conditions as reported by the New York market. The biggest movement, however, is in the refined products, where the heating oil is up around, which is nearly 10%. Similarly, gasoline has gained around 7% higher prices, and the gasoline or diesel has surged over 11%, making it the most volatile segment. This indicates a downstream supply constraints likely linked to refinery disruptions and tight product inventories. Looking at carbon markets, European Union emissions prices are hovering around 72 euro per ton, continuing their gradual upward trend as compliance costs rise. Meanwhile, broader financial markets are under pressure, with major indices down around 5 to 6%, highlighting a clear divergence, where the energy commodities are outperforming equities. Uh, uh, the key takeaway is that the energy markets are being driven by a combination of supply tightness, refining constraints, and the geopolitical risk, leading to a heightened volatility, especially in the refined fuels. But behind short-term prices movements, there are also deeper structure shifts shaping the future of energy markets. Now, coming to the segment 4, which is the structure trend and the market outlook from this analysis. Segment 4 look at the broader market outlook and the structure trends. We are seeing increasing pressure on the global energy systems from multiple fronts: rising industrial demand, growing power consumption from the data centers, and continued dependence on fossil fuels despite the energy transition. At the same time, infrastructure constraints from the LNG terminals to crude export capacity are becoming key market drivers. Markets are no longer influenced by production alone, but by how efficiently energy can be transported and delivered is also the key factor. In addition, carbon markets are playing a bigger role, with rising compliance costs influencing operational decisions for power producer and industrial players. The short-term outlook suggests continued volatility as markets react to supply disruptions, geopolitical developments, and infrastructure limitation. The last segment, which is the conclusion and the takeaways of today's episode. To wrap up, the global energy markets are navigating a complex and interconnected landscape, including geopolitical risks in the Middle East, Europe's tightening gas supply, strong price movements across oil and refined products, and structural constraints in infrastructure and logistics. The key takeaways of the market for the market participants are: diversify energy sources to reduce risk exposure, invest in resilience infrastructure and storage capacity, closer monitor geopolitical and market developments. In today's environment, success depends on understanding both short-term volatility and long-term structure shifts shaping the global energy markets. Thank you for watching Energy Insights. This concludes our today episode. If you found this analysis useful, don't forget to like, subscribe, and share. Let us know in comments also that which energy trends you would like us to cover next. Stay informed, stay ahead, and we will see you in the next episode. Thank you for watching Energy Insight.